If you're a freelancer dreading quarterly tax payments, I'm going to share a simple trick that guarantees you'll never pay an underpayment penalty again. It's called the Safe Harbor rule, and most freelancers have never heard of it. In this video, I'll break down exactly how quarterly taxes work, when they're due, how much you actually need to pay, and the one calculation that takes all the stress out of estimated payments. Note, this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancer's Wealth Blueprint, where we turn complex financial concepts into clear action steps. Subscribe for weekly videos on building wealth as a freelancer. Let's start with the basics. When you're an employee, your employer withholds taxes from every paycheck. Federal income tax, Social Security, Medicare. It all gets sent to the IRS automatically. When you're a freelancer, nobody withholds anything. You get paid the full amount, and the IRS expects you to send them their share throughout the year. That's what quarterly estimated taxes are. Here are the 4 deadlines you need to know for 2026. Quarter 1 covers income from January through March. Payment is due April 15th, 2026. Quarter 2 covers April and May. Yes, just 2 months. Payment is due June 15th, 2026. Quarter 3 covers June, July, and August. Payment is due September 15th, 2026. Quarter 4 covers September through December. Payment is due January 15th, 2027. Write these dates down or put them in your calendar right now. Miss a deadline, and you could owe penalties and interest even if you're getting a refund at tax time. Now here's what trips up most freelancers. How much should you actually pay? The standard advice is to estimate your income for the year, calculate your total tax liability, and divide by 4. Sounds simple, right? But when your income changes every month, estimating a full year's earnings feels like guessing. Here's where it gets interesting. Most freelancers don't realize they're actually paying 2 different taxes. There's federal income tax, which depends on your tax bracket. And there's self-employment tax, which is a flat 15.3%. Let me break down self-employment tax because this is the part that surprises people. As a freelancer, you pay both the employee and employer portions of Social Security and Medicare. Employees only see the 7.65% taken from their paycheck. Their employer pays another 7.65% behind the scenes. But you're both the employee and employer, so you pay the full 15.3%. For 2026, that breaks down to 12.4% for Social Security on income up to $184,500, plus 2.9% for Medicare on all your income. If you earn over $200,000, there's an additional 0.9% Medicare tax on top of that. So when you're calculating quarterly payments, you need to account for both income tax and self-employment tax. A rough rule of thumb is 25 to 30% of your net self-employment income. That covers most people in the 12 to 24% tax brackets, plus the 15.3% self-employment tax. But here's the problem. If you overpay, you're giving the IRS an interest-free loan. If you underpay, you get hit with penalties. And when your income fluctuates, hitting that target feels impossible. This is where the Safe Harbor rule changes everything. The Safe Harbor rule is an IRS provision that protects you from underpayment penalties if you meet one of these conditions. Option 1. Pay at least 90% of what you'll owe for the current year. But this requires accurately predicting your income, which is hard for freelancers. Option 2. Pay 100% of what you owed last year. This is the magic number. You already know exactly what you paid last year. No guessing required. Option 3. Owe less than $1,000 when you file. This usually only applies to very low income or if you have enough withholding from other sources. Here's the key insight. If you use option 2 and pay 100% of last year's tax liability spread across your 4 quarterly payments, you will not pay any underpayment penalties. Period. Even if you owe $20,000 extra when you file your return. Let me give you an example. Say you owed $16,000 in total tax last year. Divide that by 4. Each quarterly payment is $4,000. This year, your business explodes and you actually owe $30,000. You'll owe $14,000 when you file your return, but you won't pay any penalties because you met the Safe Harbor requirement. Now there's one exception. If your adjusted gross income last year was over $150,000, the Safe Harbor threshold increases from 100% to 110%. So if you owed $16,000 last year and made over $150K, you'd need to pay $70,600 in quarterly estimates to stay penalty-free. Here's my recommended system for quarterly taxes. Step 1. Look at your last tax return. Find your total tax liability. That's line 24 on Form 1040. Step 2. If your income was $150,000 or less, that number is your target. If it was over $150,000, multiply by 1.1. Step 3. Divide by 4. That's your quarterly payment. Step 4. Set up automatic payments through IRS Direct Pay or EFTPS. Schedule them a few days before each deadline so you never miss one. Step 5. Keep 30% of every payment you receive in a separate tax account. Don't touch it. This ensures you have money for quarterly payments and any extra you might owe at filing. This system works because it eliminates guesswork. You're not trying to predict the future. You're just paying what you know. Now, what if this year is your first year freelancing and you don't have last year's numbers? In that case, you'll need to estimate. Take your expected annual income, multiply by 0.9235 to get your self-employment tax base. Then calculate 15.3% for self-employment tax. Add your estimated income tax based on your bracket. Divide by 4. Or use the IRS Form 1040 ES worksheet. It walks you through the calculation step by step. If you're brand new, aim for 25 to 30% of your net income. You might overpay slightly, but you'll get it back as a refund, and you'll have real numbers to use for next year's Safe Harbor. One more important tip. If your income is heavily weighted toward one part of the year, you can use the annualized income installment method. This lets you pay less in early quarters and more in later quarters based on when you actually earned the money. But honestly, for most freelancers, the Safe Harbor method is simpler and just as effective. Let me give you the quick action plan. This week, find last year's total tax liability on your 1040. Today, calculate your quarterly payment amount. Divide by 4 or multiply by 1.1 first if you made over $150K. Now, set up automatic payments through IRS Direct Pay for all 4 deadlines. Ongoing, keep 30% of all income in a separate tax account. That's the system. No more guessing. No more stress. No more penalties. If you found this helpful, subscribe for more freelance finance tips. We post new videos every week. And remember, this is educational content, not tax advice. Your situation is unique, so consider working with a tax professional for personalized guidance. See you in the next one.